Welcome to StiffX Trading Flow. This is the strategy part of the discussion. When it comes to StiffX Trading Flow, we have various sections of discussion. Number one is, of course, the basic structure of the market. You know very well when you are learning the strategy, you are very conversant with the forex basics, like the candlestick patterns, introduction, what is, when, how, or how it's done. All that information. But when it comes to strategy, you're learning the technical part, or where you can be able to finance your trading and you have very good results. So that's what we will be doing in this discussion. The first part you find is on this lesson we deal, of course, with the structure. Of course, we dealt a bit on the price. Of course, all we are discussing here is all about the price. So it's the structure. Then a bit of candlestick patterns that we use in our trading as STF. Then, of course, the indicative elements, where you come to the indicators. Of course, we have a set of moving averages. Then we have some few indices like ADX. And then the last one, and see how you can combine them and be able to harness one of the trading pattern. Then we'll do a bit of trading psychology. But of course, the three parts are the key, because these are the ones that give you good trading approaches, or make your trading becomes quite easy. And the first one you're dealing with the structure is you deal with the naked part, but of course you have to deal with the theoretical part. The theoretical part you want to deal with is the price. Of course, you know the price is the leader. Before you, of course, everybody who's reading, you must have this PDF with you. When we are dealing with the structure, is the behavioral pattern in how the price behaves in all the trading assets that we have: stock of currencies, exotics, stocks, indices, cryptos, and all the other trading assets we may have. Of course, the most case you need to note is the daily chart is one of the best. Even if like here we are using the H4 chart, of course you may find it in other lower time frames, but works based on the daily chart, because this is where you have daily candlesticks that have run 24 hours a day. This means when you are 24 hours a day, that means you have all the trading sessions, traders across the globe. That means one candlesticks cannot be compared to a 4-hour chart candlestick, whereby you only have one trading session, maybe Asian, London, or New York session, and only a 4-hour cycle. That means you are missing 20 hours, because this is what we call about sampling, or the sample size is important when it comes to trading. You need to see the trading bias across the globe, and this one can only be represented by one trading candlestick or the daily chart. Then from there, moving all the way to the weekly chart and the monthly chart. But of course, the daily chart is where you find most of the traders are anchored on. They use it as their main template when they are trading. So every time you open any chart, if you come to any chart, like again in this part, you will find that the same structure. You find it when the price is moving up. You find that the price, when it drops, it continues to make new highs. Traders will take profit. Yeah, they took profit, made a new high, comparing to the previous high that was here. This was the high. You see there was a breakout. Then after some few days of trading, traders want to take their profit, and when they take their profit, then they continue with the trend. They recommit back. That means the demand is high. Then from there, the trades or the price comes to a point of transition. This pattern, you find it in each and every chart that you open. Then from there, there's always a breakout of the previous low. Here, you check here, and one of the key things you need to note, this was the previous high. And what happens? Traders take profit, then they fail to break out to the previous high. This is the first instance, or the first key that you note that actually the trade may be changing, and this year you go to a moment of raging. Then from there, now the sellers comes in and recommit back, and they break the previous support. So this is another confirmation that now we are in selling. Then traders will take profit, then they recommit back and continue to make new low. You see, like this one, you can be able to tell this is a downtrend because it continues to make new low. When the traders, after a bit of selling, then they take profit, and what happens? They'll make another low until such a point whereby the price will fail to make a new low, like what happened at this point. Where now was trying to take, yes, at this point, traders, the price kept dropping, Then all of a sudden, just a moment, I just want to check. If you check on this structure here, you will find that the price was making new lows. Then it came to a point whereby this candle here that was selling, or this low, failed to make a new low. So this was picture perfect that actually now we are buying, and from there we picked up the price, then made a new low, failed to make a new low. This one failed to break this previous low, then the structure continued to move up. So every time you are in any chart, you can be able to visualize these structures. You'll be able to know, am I in an upward structure or a downward structure? So when you come to the theoretical part, it becomes quite important, because at this point you see, when the price is making new highs, always breaking the resistance levels and making new highs, this we call higher highs. And at such a point, you're only looking for buying opportunities. So that is the structure. Until such a point whereby the price will fail to break the previous high, as we discussed on the chart. But when traders are taking profit, this is what we call retracement, or a pullback to the support level. So if you have cases like moving averages that act as dynamic support and resistance level, though we'll go to that when we go to the indicative elements, and you know what is a dynamic support and resistance, though we'll discuss that when we will be discussing some of the few moving averages that you can use again to recheck on this. So this one will make a higher low. When a traders take profits, this is a higher low. Higher low simply means, yes, it is still a higher point than the previous high, because we are moving up. Higher high, you start with the higher low. Then make a new high, higher low, higher high, higher low. And this is the structure. When you come to the downtrend structure, it is just one and the same thing. If you open in the chart, you'll find these structures. You see? Now, when the price is in a downtrend, the same case is happening. It is making new lows every time. New lows, new lows, new lows. Then there is retracement or pullbacks, making a lower high. A lower high simply means traders are taking profit. The price will never move in a straight line. Of course, to move in a staircase direction, like you are taking down the stairs. When you're moving up, it's like you're taking up the stairs, making new highs, a step back, up, make a big stride up, down the same. So a lower high, a lower low. Lower low is very key. That's why you find traders talking of trading breakouts. And this is one and the same case that you find in this chart. So when you are discussing the structure, that's how you will find it. You will find it even on the chart all the time. So lower high, lower, higher low, lower low, lower high, lower low, lower high, all this point. And if you open any type of chart, you'll find this information. It's always there. If I can be able to open any chart that you may think of, you'll find this information. Like if you want, let us open any chart and try to check on that. Like this GBBCAD, yeah, it looks a bit complex, but you can be able to see where are you currently. That is key. Let's see where you had come from. Like this one, you see, price were making new lows. Let's start from here. On this downtrend was making new lows, made a higher low. These were making a lower low, lower high, then failed to break the previous support level at this point. That means then from here, this one becomes a higher low, then a higher high, higher low, then makes a higher high, continues moving up. Then at such a point, if you check very carefully at this point, this was the highest point. This point did hit there. Then, of course, it made a bit of a higher high, then a higher low. This one was total confirmation that now the price is not making any new high. Then from there, it just drops one candlestick, make a new lower low, lower high, lower low, lower high, lower low, lower high, lower high. At such a point, then we came at this point. And such a point may be quite confusing, but it becomes, it's again another easier point where you can be able to visualize the chart. Yes, the price was dropping, making lower lows. Then check here. This is the first key thing you should have noted at this point. Check at this chart here at this point. This was a lower high, then makes a lower low, lower high, fails. This point here, this support level, didn't break this point here down. So that's how you check on this naked chart. That's how you. So from here, it becomes a buy, So it's a higher high, a higher low, makes a new high, then just drops. This one comes because of news or end month or anything that may happen. So, but you see, it was a very simple point of a short-lived uptrend structure. Then breaks a new low. And of course, it made a new a lower low. So you're expecting to make a lower high, then it continues dropping. It fails to do that. It just moves up. So this was just one crazy. And the first higher low you find is here. So just makes a higher high. A higher low you could have bought at this point. Then it's dropping again. And if you check at this point once again, it has failed to break down. So maybe this one still remains to be higher low. Then you expect GBBCAD to continue moving up. So this is one how you study these structures. Let's also study another one, like Euro USD. Of course, this is one of the best and the perfect one. You see now at this point. Price, let's start from this point, from what you can be able to visualize from the chart. Let's start from here. Of course, this you can see this is a lower low, lower high, lower low, makes a new low. Breaks the previous resistance level. And this was the first fail to break this point. You see this candle, then breaks out to make a higher high. But of course, you are waiting for that candle whereby it will make a lower low, a higher low. Then you continue moving up. It fails. Then start dropping once again. So from this point, it fails. You see these buying candlesticks. It fails. So from this point, drops down, continue dropping down, continue dropping down. This is a point of what we term as a raging market. Because when it comes to the structure, you have three types of structures. One, a downtrend structure or an uptrend structure. So then continues dropping down. Then from this point is very key. I want to show you this point, like Euro USD, what has been happening for the last 1 month. If you check at this point, and then at this point, what do you find? You find that at this point is what we call a rectangle formation, whereby the market is in a range mode. It's moving within a certain range of price. Since 19th, around the whole month of November and December. And it's good now that in January, we have a very huge breakout. So what you are expecting now, this tells you the upward structure is the one that is forming. So this is a higher high. We don't care how many times it will move up then, but when it drops further back, the first bullish candlestick is when you start looking for entries. But of course, after this point now, you ask yourself, now where do you make entries in this market? And like in this week, we discussed in some of the cases where you've picked such trades in the market based on the structure, like in USD CAD has been one of our best. You see the market like this one, this was a very simple structure of an uptrend, making new highs. This was the last lower low, lower high, fails from this support level. You can be able to trade even naked chart. It's very simple. Then from this point, this becomes then higher low. Then you continue making higher highs, higher low, higher highs, very smooth. This was very simple. Then from that point, this one drops, fails to break out at this point. So from this one, from these candlesticks, it was one of the best one. And now it even breaks the previous support level at this point. This is where you find your total confirmation. Then from this point, makes a lower low, retraces back, could have entered based. Now you enter based on these candlesticks. Now this is where the candlesticks comes in. And one of the best that we'll be using is the pin bar or the bearish or bullish, or what we call in one term engulfing bars. And this will be our next short topic and our next lesson on strategy, but the structure becomes quite easy. Now you can check at this point. Like in this one, it was a very simple. This was a buy, then a bearish bar. These two pairs, this is what we call a bearish outside bar. But of course, we'll discuss them in details in our lesson number 2. Then from there, the price just continued dropping until whereby to hit a certain support level, like in such a point, retraces back. This has already broken and is making a new low or a lower low. Retrace back and make a lower high. Then continue making lower low, maybe at such a point until when the structure will be broken. This is something you should visualize from the back of your mind, so that when you go to the indicative element, Can you be able to see that structure hidden within all these indicators you find here? Traders talk of so many indicators, but these moving averages, as you can find them, they help you now to time your entry. Like you can see, like this one was a very good entry from this point, just dropping down because it is within the value zone. But this will be our last lesson on our indicative elements. Of course, then we'll be able to see how you can be able to hit entries. But at what exact point do you hit your entries? When the price makes a retracement or a pullback, like this one has confirmed already, has made a new high. When it retraces back, the first bullish candlestick, if you're using the daily chart to hit an entry, this is where now from this candle, you want to ask yourself, this pair and this pair makes a bullish engulfing bar. So from there, you can hit a buy, putting your stop loss below this candlestick, previous candle here at this point. So if it is this candle here, you can see it's a very good pin bar or a bullish engulfing bar, whichever it qualifies for both. Then you can hit an entry at this point, at the open of this one. So this is your risk range. Then from there, you can use the next resistance level to hit. Maybe this one can be your TP for a long term, or even this one is the best for the TP. And you can see it went all the way there. And when it hits this major TP, what happens? Just drops big. Then tries to make the last push up and fails. Of course, it makes a bit of fail, but if you're combining with other strategy, you'll find here, you'll find a failure around this point. So this is where the market fails and start hitting you over. It's the same case that was happening even with Euro USD. After all this point, it was trying to make new high, then failing, but now from yesterday's candle, it has fully confirmed because it has come out of this raging zone. And we don't trade the raging zone. We trade only this in this, and this is where now the indicators come, because you want to pick the strongest trends, but that can make you good returns. Another case is like GBP versus the USD. You can check, making very good strength. Structure is so simple when you're using it. Lower lows, lower highs. Lower lows fails at this point, higher high, higher low, and continues moving up. And even this week we've been trading all these candlesticks. So this is one part you can be able to use the structure, or even naked chart trading. You can use the structure is key because it lays the foundation of trading. And of course, make sure you use the daily chart. Do not use any other time frame for your own good. Another one is like you had US dollar versus the South African rand, an upward structure. This was the first breakout confirmation that actually now we have changed the trend. This one failed to break out, makes a lower low, retraces back. You can use these candlesticks, bearish engulfing bar. We had the same thing yesterday morning. We hit this one sell. This one, the one we'd given a free signal. So these are some of the cases you find in the market. This is what we call the structure, and how you can use the candle. So tomorrow we'll discuss on the candlestick pattern in our next lesson and see how you can be able to use the candlestick. Of course, we want to go to the theoretical background and see how you can be able to use such candlesticks, so that from there you and you can see these are the candlestick pattern. You see, when the market is making an impulse wave in the direction of the trend, that's what we call an impulse wave, retraces back. You can see these candlesticks here, and you will be able to name them. Like this was a bullish engulfing bar. Of course, this one we call it a piercing candle, but also qualifies to be a bullish bar. If you're a good trader, you can be able to see what a piercing candle means. Number 3, of course, there's a pin bar. You can see a very good pin bar. You can either enter based on this pin bar or wait for a bullish bar. It depends. Are you an aggressive trader? It all depends. These are a perfect bullish engulfing bar. You see what is that tomorrow. Number 5, this one, of course, this one is an inside bar, or others will call it harami. It depends. We go through them basically and see the ideologies behind that. This also can qualify to be a pin bar. And candlesticks is in an upward structure, and you can see like these ones, we'll be able to name them. So retracement is a pullback, whereby the traders, after some few days of buying, they want to take profit from the long end before they continue with the trend. So I think that is it. So even with such a chart, can you be able to tell the kind of structure that you have here? Yes, you can, because the structure is there. Be married to the daily chart, because it's one of the best that you can use. So before you go to the candlestick part of trading, so there is it. That is it for the first lesson. We'll continue in our next one from STF, learn and earn.